More on what we should expect in the markets next year as we get set up for the final Friday of 2024. Let's bring in Brian Mulberry, Zacks Investment Management Client Portfolio Manager. Brian, great to have you with us.
Thank you.
So 2025, 8 to 10% kind of year. That's kind of okay.
Normal is what I would say. It feels abnormal since we've had a 2-year run in the S&P up, almost 50%. People kind of get lulled into this false sense of security. Where's my 25% return year over year? All we simply see in 2025 is a restoration to normal. That also brings with it more threat of volatility as well. The one thing we didn't have this year really was a lot of downward volatility. So we expect more normal trading activity, more normal valuations. We see a pretty positive outlook overall. 8 to 10 to the upside is a good number. But what we're expecting is earnings growth of about 14% on the S&P 500. The issue with that is most of that is being driven by the Magnificent Seven. So if we take away the Mag 7 stocks, that earnings growth drops to about 4%. That means that we could see a more volatile market caused by any miss from those 7 names because they account for so much of the earnings growth in 2025. So that's something that we have to pay attention to, a risk you definitely want to address and manage in your portfolio as you start to put pieces together for the new year.
So you're still forecasting that the markets will be dominated by the Mag 7. So a return of 8 to 10% is actually on the Mag 7 a higher return, and the rest of the S&P 500 still sub that number.
It still seems that way because they really do have the most earnings growth, and it's real revenue, and they're profitable. What you would be concerned about is if that share price growth was driven by non-profitable companies. That would turn it into more of an asset type of a bubble. The earnings are real, the revenues are real, and they're still dominating the market. What we do expect by the back half of 2025, though, is probably more competition for those Magnificent Seven stocks. So we start to see more people invest in themselves. We're hearing a lot about it this morning. AI starts to be monetized by other companies, and that return on investment is going to be important. So that's going to be the race to the back half of 2025, is to see who can monetize AI more going forward.
Will that be an investable theme, though, in 2025? Who is monetizing? Because if you say that Kroger is monetizing, if you tell me that, a health company is monetizing, that doesn't tell me that I should be putting money there.
No, exactly. We're talking about, real AI, which at the moment we're at the very leading edge of this technology. We certainly acknowledge that. But there's really 2 types of businesses. You have the large language models, all the chatbots. Those are actually creating real revenue for balance sheets through a subscription model, something that you can weigh and measure, not unlike Netflix and things of that nature. So there's real money, a real customer closing the loop. That's monetization in our view. On the other side, you have generative AI. This is self-driving taxis, robo-taxis, things of that nature. A lot of investment there, but we're not quite closing the loop, engaging with enough customers to call it a real business yet. I think investors are going to want to see more progress made along those businesses as well.